gold, apart from being a currency, is also the ultimate safe haven. For example, there's a world war. Everyone is fighting. There is nothing to gain. So even if you have to protect your purchasing power, the fallback is the gold. A lot of Indians actually ask me what happens after Diwali, because we think Diwali actually drives prices. Jewelers made us believe that we have no say in gold prices.
Really?
The color of gold doesn't really dictate the purity of gold. So if you mix zinc, it becomes yellowish. If you mix copper, it becomes reddish. So if you see Rajasthani jewelry and all those things, they have a reddish tint. If you go to Kerala, it will be more yellowish. The South Indians will say we have better gold because it's more yellow.
Robert Kiyosaki, the author of Rich Dad Poor Dad, he is predicting that the silver price will become 5 times in the next few years. Do you have a similar kind of prediction?
Currently, it's around $50. We are expecting it to go to around 3 lakh rupees.
In how much time?
My prediction is around 18 months.
Do you have any percentage allocation in silver in your investments?
I don't.
Zero?
Zero.
But you just said that you won't be surprised if silver doubles in the next 18 months. Then shouldn't you invest in silver? What do you forecast the gold price to be in the next 1 or 2 years then?
Hey guys, welcome back to another episode of the 1% Club Show. In this episode, we are going to be talking everything about investing in gold and silver. Gold and silver has rallied like crazy in the last 1 year. Gold alone has given upwards of 60% returns in just 1 year. And to unravel this entire thing, I'm sitting here today with Mr. Kishore Narne, who is the Executive Director of Motilal Oswal. They have the largest research team for the commodities market in India today, and they will know everything about how to invest in gold and how long to invest in gold to improve your financial journey. So let's get started. So Kishore sir, why don't you start with the most important question? What the hell is happening that gold has given 60% returns and even silver is picking up now?
Yeah.
So maybe you can simplify for the audience here, who is a 25-year-old, 30-year-old, absolute beginner in the market, who's only heard about stock market, Nifty, mid cap, small cap. Now gold has beaten all of it.
Yeah.
What is happening?
So historically, it's not a new story, but historically, gold as an asset class, we don't need to explain to the Indian households because we have grown up in our households. That's the only asset which we had coming over from generations and generations. It's been passed over. That's the only asset which we have acquired, apart from the little bit of real estate and all those things, right? That's the second best asset as far as Indians are concerned. So we have associated a little bit of religious, cultural aspects to that, but it's pure investing. It's pure storage of value, right? But if we go back into the history, gold is the ultimate currency. Actually, it's not an asset. It's not an asset class. It's a currency, actually. So if you don't want to lose your purchasing power, the only way you can store your value is gold. So technical terms mein, if you say, you will never lose value, but you will also not gain value. Okay. It's a very interesting way of looking at it. For example, if you are able to buy one bag of wheat with a certain amount of gold way back in, let's say, 1800, you should be able to buy same amount of wheat with quite less amount of gold today, right? So basically what changed? The value of gold changed or the value of wheat changed? Whether wheat became cheaper or gold became expensive.
It's a little confusing,
right?
Question. Yeah.
So what happens is, for example, if we measure a distance from here to there, let's say it's 10 feet, and you're measuring it from with a 1 feet scale. So it's 10 units, right? If you cut half the scale into half, then how many units? It will be 20 units.
Correct.
But whether the distance changed?
No.
The measure changed. The measure is what we measure gold value in. That's the currency. So you measure in rupees, you measure in dollars, you measure in whatever the pounds or anything. If the rupee value shrinks, that means the number of rupees you pay with the same amount of gold increases.
Right.
But the gold value didn't change. The measure has shrunk. So the value of gold, when it increases, a lot of times it has to do with the currency shrinkage, the value purchasing power shrinkage.
So meaning the gold price would feel different in different countries.
Yes, absolutely.
That's the...
absolutely.
Got it.
And depends on your currency value.
Got it. So why is gold price increasing so rapidly in India? Not just India, it's the news all around the world also, right? So the same news is happening. Yeah. So why is that?
The second aspect of gold, apart from being a currency, is also the ultimate safe haven. whenever any uncertainty happens in the world, any uncertainty, financial, geopolitical, or even including COVID kind of scenario, the only asset which is a fallback mechanism for everyone is gold. Because this is the ultimate protector of your purchasing power. Because if I don't want to gain anything in an uncertain scenario, for example, there's a world war, right? Everyone is fighting, there is nothing to gain. So even if you have to protect your purchasing power, the fallback is the gold. So even in the current times, the current rally started around 3-4 years back, actually. The story was that after COVID, there was a lot of interest rates which has gone to zero and all the cost of money is negligible. Then the inflation hit, so interest rates went up. The anticipation of interest rates will fall. The cheaper the cost of money, it's better for gold.
Why is that? Can you explain?
Because the gold is the only asset which doesn't pay you anything.
Okay.
If you keep money, you can keep it in your bank account, it will pay you interest. If you buy stocks, they'll pay you dividend. If you buy bonds, they'll pay you interest or a coupon.
Yes.
Gold doesn't pay you anything.
Okay.
If the money is expensive, that means your FD rates are, let's say, 9-10%. Nobody will go and buy gold.
It's interesting.
Right? If your interest rates, your FD rates are 6%, let's say, and your inflation is 10%.
People will buy gold.
Of course, because even if you keep in a 6% FD, after 1 year, because inflation is 10%, you actually lose 4% value in your purchasing power. But gold will not lose that.
So does that mean that we are going to see the continuation of the rally of gold and silver and other commodities based on what you just said?
Yes. Actually, we are in the beginning of the cycle of interest rate cuts. We just seen one rate cut in US after a long time. We are going to see another 5 rate cuts in the next 1 year.
Really?
By end of 26, there will be 5 rate cuts.
Wow.
Yeah. So 25 bips, that's around 125 bips rate cuts will happen. That's the current market expectation. And similarly, the Europe also will be cutting rates.
And what about the Indian central banks?
Indian central banks will cut the rates, but we are not in a hurry. I think we'll be having around 2 to 3 rate cuts in the next 1 year or so.
Okay.
We are not in a hurry because we are not really plagued by lack of growth. We still have growth.
Yeah, because we are a developing
economy.
So what do you forecast the gold price to be in the next 1 or 2 years then? Because you're saying there will be continuation of rate cuts.
Yeah.
And the US central banks are the most powerful. So that will affect the whole world.
Yeah.
So what do you predict the gold price to be? 2027?
To be very honest, it's a most tricky question to answer right now. Absolute.
Like, should I sell my house and buy
much
gold?
more upfront on this.
Yeah.
Because if you asked me this 6 months back, I would have been extremely confident in telling that level. So we were predicting around 4,000, 4,200, which is already here. But what we were predicting was that gold generally rallies around 35-40% in a year. Now it has rallied by more than 50-60% in 6 months to 8 months.
Correct.
So the speed of the rally has surprised everyone.
Even
including me. Because whatever we were anticipating in 18 months was turning up in 6 months.
And you're somebody who's been studying this field for the last 25 years.
Absolutely.
And it has surprised you also.
Absolutely.
Okay.
It's not the direction, it's the speed.
Right.
And speed is scary. When you're going up so fast, it's scary that at some point of time, this momentum will stop. If it stops, it will fall down, right? This is what the scare of everyone today, whether should I buy gold or not. I want to buy. But tomorrow, if it falls by 20%, I don't want to buy now.
So that's a possibility is what you're saying.
That's absolutely a possibility.
Okay.
Right? So so when you're asking me where the gold is headed, of course, it's headed northwards. It will go, it will further increase. But absolutely telling a number is like a guess.
Why don't you take a guess?
So my guess is around, right now we are standing at around 4,500 as a target. The last report.
Can you, for the audience?
So 4,000 is currently in the dollar terms.
So can you speak in rupee terms?
Rupee terms, we will be around 1,30,000 to 35,000.
That's right now.
That's not right now. That's right now we are around 1,20,000 something.
1,20,000 per gram, per 10 grams.
Yeah. So around 20% higher from here.
Okay.
But it comes with a caveat that because we have grown much faster, there is always a chance that 5-10% dip might come.
Okay.
Right? And for Indian audience especially, a lot of Indians actually ask me what happens after Diwali. Because we think Diwali actually drives prices.
Correct.
No, jewelers made us believe that. But Indian Diwali demand really doesn't have a much of impact on gold prices globally.
Really?
We have no say in gold prices.
But if almost every Indian family is going to go to the jeweler shop to buy gold for the upcoming wedding season in November and December.
Yes.
Shouldn't that demand spike price?
But demand spike doesn't happen today.
Why?
The jewelers bought gold long back in preparation for this.
Okay.
If we don't produce any gold. We import 100% of our gold. We don't have any gold production in India.
We don't have any gold mines in India.
We have the Kolar gold fields, but they are not functional. They've been shut down long back.
Oh, KGF is not functional.
Yeah.
Okay.
KGF is yet to be opened. So right now they become viable because the price was not, the amount of gold which is getting recovered from that is not viable to extract. The price was not viable. So currently they are viable. I think they are in the reviving stage.
So basically what you're saying is
tiny
that
amount.
Basically what you're saying is that all the major jewelers of our country have already bought this gold for this demand.
Yes.
So it's not going to increase the price.
Couple of months back, and they have manufactured jewelry and they stored into their stores. So now we are buying. We are not causing the spike today, right? Second is that we for a fact we are not the largest consumer of gold in the world.
They are second largest.
We are second largest. We lost this place to China.
Correct.
And almost a decade ago.
Yes.
So we still think, a lot of people think we are the largest, but we are not.
Okay.
And China is the largest, number one. And the big daddy of the entire gold purchase is the global central banks. Central banks means the
RBIs of the world.
Yeah, RBIs of the world. The Turkey, China. China is buying like crazy purchasing.
So we could say that they are the ones driving the gold price up rather than the end consumers like us.
Yes.
Got it. So how much have you invested in gold percentage wise?
Percentage wise, I have, let's say, around 20% of my portfolio will be in gold.
20% of your portfolio is in gold.
Yeah.
Interesting. And how do you actually know what is the true price of a gold? Like, for example, in the world of stocks, I can accurately value a company based on its balance sheet, financials, who gets profits, do that, profit multiple and be like, okay, this is the true value of the stock price.
Yeah.
In gold, how do I do that? Like, how do I find the intrinsic value of gold and say that, yes, today's value of gold should be 1,20,000 rupees per 10 gram?
Yeah.
How do you guys do it?
Yeah. So when you look at intrinsic value of a stock, right? So for example, 100 rupees intrinsic value stock might be quoting at around 1,500 rupees. That's what we call it, 15x PE.
Correct.
Right?
15 times the earnings.
50 times the earnings or book value. So the book value is the intrinsic value, right? For the stock price.
Correct.
But stock price never trades on book value. Sometimes it might trade lesser than the book value also. Sometimes it trades hundreds of times of the book value also.
Correct.
Right? So here the book value is the intrinsic value of the commodity. So what is the cost of producing that commodity? A kilo of gold today is around 1 crore 20 lakhs.
Correct.
Roughly.
Yes.
Right? And the cost of production will be somewhere around 35 lakh rupees.
Acha, okay.
35 lakh rupees. So,
okay.
In $4,000 an ounce is today, the cost of production is around 1,200 pounds.
Okay.
$1,200.
Okay.
Right? So, roughly 1/3 is the cost of production. So,
okay.
But the thing is, people pay premium. So, that's exactly like equity market. People pay premium. How much premium is decided by the market?
Right.
So sometimes the price to book value could be 10 times, price to book value could be 200 times in a company like, let's say, DMart, where the people are expecting a lot of this thing. So they will be trading hundreds of times of its earnings.
Correct.
Right. So that value is given by a consensus market. So in commodities also, price is given by consensus of the market. The value, that is the intrinsic value, could be far less or far higher also at times.
So with gold right now, it's 3 times the cost of production.
Current price.
Based on the current price. Which means if I go 1 year back, then it was just 2 times
Yes.
So generally, what is the correct ratio for the gold according to you? How much time should it be the cost of production?
There is no general rule, but general rule is like around 30% higher than the cost of production is generally traded in a normal peaceful conditions where if you look at 1980s to early 2000s where the gold has not moved at all, 5-10% in 20 years kind of thing, the cost of production to the price will be around 1.3 times.
Wait, you're saying for 20 years gold has remained flat also?
It remained flat also.
Acha.
So the gold the mother of the rally started in early 2004, 2005.
Okay. So right now we're at 3 times the cost of production.
Yeah.
And this also you're saying is not too bad. Like what is the highest it has gone to?
I think we are at the highest.
Ever in history?
Yes, yes.
Ever?
Yes, yes.
So 3 times the cost of production of gold is the highest it has ever been in history.
Yes. Because commodities cannot really quote hundreds of times of their intrinsic value.
No,
They
but if
never.
it's the highest it has ever
Because-
been, all-time high,
Yeah.
isn't that also a point of worry? Because a normal retail investor will be like, oh, this is the highest it has ever been.
Yes.
Is it even possible for it to go higher than this? And
Yes.
they're like, let's stop, let's exit.
Yeah.
That's how a normal retail investor thinks.
Yeah.
How do you think about it?
See, the story is different this time, right? The politics and geopolitical situation after the World War II, this is the first time we are seeing that the entire system has been reconfigurated, let's say. The global system is reconfigurated. The global alliances are reconfigurated. And we are looking for a change of leadership. So if the the world is looking at a change of leadership, it always comes with chaos. For example, a king comes to end of his term and there is a dethroning of him and somebody else is taking over, even as a family member or something, everything comes with a chaos. We've
Correct.
seen that change of monarchies, everything comes with a chaos, right? So this is what is happening. The global leadership position is going to change in the next decade. And it's not going to change in a year or a few months. It's going to take it. And the guy who is going to fall is not going to fall without fight.
Of course.
That's what is happening right now.
Yeah.
He's putting up whatever the best possible fight he can.
Yeah.
Right? Where the challenger is sitting in a very comfortable situation.
Yeah.
Right? So in the entire this chaos, people want safe havens. So this is after World War II. This is the first time we are seeing so much demand for safe havens. If you go back to yesterday or day before, Financial Times headline was that the FOMO of gold, right? So globally there is FOMO, and the FOMO has kicked up only in the last few weeks. The intelligent investors and the central banks were buying since last 4 years post COVID, and the FOMO has just started. People started noticing, the entire headlines are now burst out of with gold, everything. The gold as a word is trending, etc., etc. So, apart from Indians who traditionally keep buying, whatever the price is, if you speak to the jewelers, whenever there is a surprise price hike or price suddenly jumps up, there will be a lull period. Nobody walks into the showrooms for a month. Once after a month, people digest the price and again come back.
Correct.
They just have to wait for that.
Right.
And today, if you look at the showrooms, I think they were like last month and a half, they were like waiting for the consumers. There were no consumers.
Right.
And today they're flooded.
Right.
They're flooded for silver. They're flooded for gold. And I've been told silver, there is a waiting period of 5-6 days.
Wow.
Today you have to pay and some kind of 5 days waiting period for the metal to come. There's no metal available.
I actually wanted to ask you this because I read an article recently that Robert Kiyosaki, the author of Rich Dad Poor Dad,
Yeah.
he's predicting that the silver price will become 5 times in the next few years.
Yeah.
Do you have a similar kind of prediction?
See, as a responsible analyst,
Right.
you cannot just throw some numbers.
Right.
Right? Absolutely possible. I am not denying that.
Okay.
And it has become double in last 1 year, 14 months or so.
Okay.
Right? It used to be $22. Today it's around $50.
Okay.
Right? So it's more than double now in around roughly 14 months. Currently it's around $50.
Okay.
We are expecting it to go to around $90. $90 in Indian terms, roughly around 3 lakh rupees.
In how much time?
A kilo. I don't know that.
But your prediction is that
My prediction is around 18 months.
18 months, it'll double, you're saying. That's your prediction.
Should be, yes.
Interesting.
Yeah.
Interesting. And also, I was reading a little bit about this gold to silver ratio that's become really popular online these days. Can you explain that to us? Like, what is this gold to silver ratio that we should follow to know if either gold or either silver is correctly valued based on historical patterns?
Yeah. Generally, they actually fall back on the ratios. How much crude we were able to buy with 1 ounce of gold in 1960 versus today. Everything is priced in such a way.
In relative terms.
You remove the currency value. You take gold as a standard currency and value the other commodities in golden terms.
Acha.
Because as we discussed, the currencies keep fluctuating. So rupee used to be 40 rupees a dollar. Today it is 88 rupees a dollar. If you are pricing any commodity in rupee terms, the doubling of the effect came from rupee depreciation,
Correct.
not from the commodity fundamentals or
Correct.
the demand or supply.
So how do you remove the currency out of it?
Then standardize all the currency prices into one commodity, which is the gold, the benchmark.
Okay.
Right? So the benchmark, in benchmark terms, how much gold is required to buy 1 barrel of oil or 1 kilo of silver
Okay.
in way back 100 years back to today is called the ratio.
Got it.
Right? So traditionally, for the last 60, 70 years, apart from last 2 years, if we keep the last 2 years aside, 60 to 70 silvers you can buy with 1 gold. So 1 kilo of gold is equal to 60 to 70 kilos of silver.
This was the ratio.
This was the ratio.
Okay.
Whenever this ratio goes to 60, that means you are getting 2 less silver for gold. That means gold is slightly overvalued and silver is undervalued compared to those two.
Got it.
When it goes to 80, 85, that means there is too much of silver coming for gold. So each is undervalued and overvalued.
Which means
But
silver is
today-
undervalued.
Today,
Huh.
it's nearly around 100.
Meaning 1
So
kg
1
of
kilo
gold,
of gold is equal to 100 kilos of silver.
which that would mean that silver is undervalued.
Yeah, you can say.
Comparing
You
with
can say
historical
that.
terms.
Yes. But things keep changing fundamentally also. Silver used to be a precious metal. There were not much uses of silver apart from some silverware and some plates and dinnerware you make. Apart from that, silver was used for photographic films when the film was used in photography.
Yes.
That was major use of silver. But today, silver is used, the major use of silver comes from, around 25% comes from solar panels.
Okay.
The photovoltaic cells, which we call, the same technology which was in photographic films is today used in solar.
Okay.
The silver oxide which is coated on the solar film changes when the light hits it. The same which used to happen in the cameras. And that produces energy, which produces power.
And there's no alternative to this.
There's no alternative to that because that's the chemistry of that. It needs silver. So roughly around 20-25% it goes into that. And electronics and electricals is a big consumer of silver. Yeah, all the electronic gadgets in the circuit boards, everything is printed in silver.
Okay.
Right. So that's the second best conductor of electricity after gold, actually, because gold becomes so expensive, you can't use gold. So silver is the alternate.
Right.
Right. So silver became a major industrial commodity because of the electronics, the circuitry, chips, all these smart gadgets, let's say, all the laptops, everything has silver.
Sure.
Apart from that, automobiles, for example, a traditional ICE vehicle uses around, let's say, 10 grams of silver, roughly, in a vehicle. And an EV uses around roughly 70 to 80 grams of silver in a vehicle.
Wow.
Per vehicle, because of electronic components.
Got it.
The traditional ICE vehicle doesn't have so many electronics, which the battery-driven vehicle will have. So the entire renewables and the modern technology actually changed the use of silver itself. So after around 40-50 years, last 2 years, last year and this year, we are seeing first time the silver production is less than the demand.
Okay.
So that's actually causing a much bigger rally in silver. That's why silver is outperforming gold.
So I was just talking to some of my rich friends. The last couple of years, they've just been buying gold. So now they've stopped buying gold and they're buying silver bricks.
Yeah.
Right? They're going to the jeweler shop and actually buying this big silver brick.
30 kilos.
And they're keeping it in their house, locker.
Yeah.
So my question to you is, how do I know how much percent of my portfolio should be in silver right now? Maybe I can first ask about you.
Yeah.
Do you have any percentage allocation in silver in your personal investments?
I don't.
Zero.
Zero means
in spite of
some of the what you call the household silver. It's a different issue.
But you just said that you won't be surprised if silver doubles in the next 18 months.
Yes.
Then shouldn't you invest in silver?
So I see my portfolio objectives could be different, right? So what happens is silver will give you far higher return, but it brings far higher risk into your portfolio also.
Can you explain that?
So silver is like a high beta commodity. So for example, in the equity terms, because people understand equity more, so you have Nifty and Bank Nifty. So Nifty and Bank Nifty is a cousin of Nifty, but it is a much smaller index with only banking stocks. That's why it's more skewed. So the returns in an upside, Bank Nifty will give you far higher returns. But when it falls also, Bank Nifty falls much steeper. It's the more volatile cousin of Nifty, right? If you want a slower movement in your portfolio and lower risk in your portfolio, Nifty is a better alternative. Bank Nifty will bring you higher returns with also added risk. So similar to that, gold will be a more stable commodity. It will give you stability. Even it falls slowly and much lesser. It rises also much slower. But silver rises much faster. Whenever it falls much faster. It falls 1.5, 2 times of what the gold will fall. If gold will correct by 10%, silver will correct by 20-25%.
That is what has been historically observed.
Yes, it is. It's always. And because it's a smaller metal and the skewness is much higher, the volatility is much higher. So if you like the volatility in your portfolio, if you want that additional risk and you are willing to take that additional risk for the additional return, it's a best addition to your portfolio, but it will bring you that additional risk.
So I just wanted to unbundle this, right?
Yeah.
Because one is the trend.
Yeah.
The trend is for sure going up.
Yeah.
You're like, there might be volatility on the way,
Yeah.
but the trend is up, not going down.
Yeah.
So by that logic, if I'm okay taking that risk,
Yeah.
then it's a good investment.
Absolutely.
Right? But if I
you
can't
should
stomach
have the nerves to hold when it goes down.
Yeah, 20% correction. If
Yes.
I put 10 lakhs,
Yes.
2 lakhs can go down.
Yes.
And if at that moment of time, if I'm not a mature investor and pull out my money,
Yes.
then it'll be a
Absolutely.
problem.
Absolutely.
Interesting. My second question is, or my second doubt, which is a very popular question among people,
Yeah.
buying gold from Dubai.
Yeah.
Right? That is like the most popular trend. Even if you take a flight, go to Dubai, buy gold, come back,
Yeah.
it's still going to cost you cheaper than buying the gold in India.
Not really.
Has that changed?
Yes.
Why has it changed?
So we used to have a import duty on gold roughly around 12%.
Okay.
Plus a cess of around 1.5% on that. So that takes you to around 13.5% import duty and another 3% GST. So
Okay.
your total cost of total cost of purchase of gold in India, taxes were 15.5%.
And also all 100% of gold in India is coming from outside India.
Outside India. So
So-
you have to pay this one. So this is priced into the gold price only. No jeweler will charge you extra. This is part of the gold price. How gold price in India is calculated is you import gold, the dollar price converted into rupees as per today's RBI reference rate. Add a little bit of bank charges. Around 10 bips is the bank charges for the import and the conversion of the price.
10 bips is 0.1%.
0.1%.
Huh.
Right? And add the import duty.
Which
Because
is,
you have to pay to the government import duty.
how much is that?
Today it's around 2%. It used to be 12.5%.
Oh, that reduced to 2%.
Yeah, in the last budget,
Acha.
right? And then 3% local GST is added. That's where you purchase. So 15.5% you used to pay to the government
Earlier.
earlier.
Now?
Now it's around 3% GST is anyway there, and around 2.5% is the cost. So 5% is your 5.5% is there. If you buy anything in Dubai, 5% VAT is there.
So it's now
So it's
same.
the equivalent actually.
And now the flight cost, hotel cost will be more, so it doesn't make sense anymore.
That doesn't make sense. So, and also the tradition, if you're buying jewelry, the jewelry which is designs available in Dubai is also slightly different than what you have traditional jewelry. There it's more mass produced, machine made things, not the handmade ones and all. So,
Also, whenever I make any post on buying gold in Dubai versus India, in the comment section, I see a lot of people who are NRIs living in Dubai
yeah,
saying that the quality of gold is better in Dubai compared to India. It's more pure.
yeah,
Is that true?
no.
But why do they say that?
So there are two aspects for this. One is the color of gold.
Yellow.
People see the Dubai gold is more yellowish
Okay. Why is that?
and Indian is slightly copperish.
Okay.
Because gold, when you manufacture gold into an ornament, it is not 100% gold. It's 916. We call it 22 carat.
Huh.
It's 916. So out of 1,000 grams of gold, 916 grams is gold. Rest is impurities.
Okay.
Impurities could be copper or zinc
To hold the gold
to
together.
hold the gold, to give this toughness to
Correct.
that, right? So if you mix zinc, it becomes yellowish. If you mix copper, it becomes reddish.
Okay.
So traditionally in India, North India specifically, use copper. So if you see Rajasthani jewelry and all those things, they have a reddish tint. If you go to Kerala, it will be more yellowish. The South Indians will say we have better gold because it's more yellow.
Very interesting. I did not know this.
Right? This is
So-
one aspect.
Which means in Dubai they put zinc.
It's more zinc because most of the South Indian jewelers are there in Kerala.
Yes, the
Jewelers-
Kerala people, they come, they go to Dubai and set it up.
Yeah,
over
so
there.
it's more jewelry manufacturing process. It's
Right.
not really different. You can have white gold also today. So it doesn't, the color of gold doesn't really dictate the purity of gold, right? It's very different. Second is we have a very strong hallmarking system today present in our country, right? So the government has pushed it very, very stringently, and now we have a traceable number on each piece of jewelry, which you can actually log into BIS hallmarking website and trace where this has been manufactured, who tested it, and who certified this.
Oh, really?
Yeah, 100% jewelry. 100% every piece is now has this. This is mandatory in India.
So that I know the entire
Unique
supply
number
chain.
for every jewelry piece
Interesting.
with the traceability. So India used to be a bad jewelry market with a lot of 60% gold we used to get actually. Technically, one of a very large refinery MD who is currently retired, we were having a dinner conversation one day because most of this recycled jewelry goes back to refinery to melt it and make again into the 100 grams and 1 kilo bars. Right? Jewelers don't really make it into fine gold actually. They melt it, but actually they send it back to the refinery to make it into fine gold because you have to again refine it. There are a lot of impurities after that.
Correct.
So when we were having this conversation, Kishore, this was like 6-7 years back or 8 years back, I'm saying, when the hallmarking was not statutory in India. Right? So when they get the jewelry to melt it and refine it, so what is the typical recovery was 60%.
That's it.
That's it. So 40% was impurities. And we were always, and India, all the customers go and ask for 24 karat gold, which is 995. And people used to sell it as 24 karat, pure gold.
But actually had 40% impurities.
Yes.
This was a scam that was happening.
It used to be the scam. It used to be the case. So government has really pushed it through. For the last couple of years, all the manufacturing has gone into standardized hallmarking and all those things. Because of the traceability, even whatever the corruption which was happening in the certification process also is now gone. So you can actually very fairly say that we have good quality gold. Apart from your buying from some street corner jeweler who doesn't do anything or he manufactures his own gold, it's a different issue. But in a general manner, our gold is as good as quality wise.
So there's no difference between Dubai gold and India gold. If it says 22 karat, so it will be the same purity.
Making charges will be different because in India, most of our pieces are handmade and handcrafted. So we generally command around 20-25% making charges.
Wow.
Right? In most of our large stores.
So
Dubai
20%.
will have around 7-8% making charges because most of the jewelry there is machine made.
So meaning if I buy 10 lakh worth of jewelry in India, you're saying 2 lakh is making charge, which is already a loss.
Yeah, generally, yes.
And in Dubai, if I buy 10 lakh worth of jewelry, only 70,000 rupees is making charge.
7-8% is making charge.
Interesting.
So
that still makes a sense to buy jewelry in Dubai then compared to India.
The difference is not that bigger. And also most of the times when you buy jewelry, you buy for the design.
So you're saying Indian design is better than your Dubai design?
The handmade always commands much higher value, the pieces, rather than the machine-made ones. So if you're buying a general kada or some kind of a ring or something, which is a machine-made, you'll anyway, even in India, it's around 7-8%.
No, I recently bought like 2 lakhs worth of gold jewelry. So you're telling me that 40,000 rupees is gone, waste.
Yeah. So in general terms, if you churn your jewelry 3 times, you bought a jewelry, you exchanged once for a fresh jewelry. So if you do it for 3 times, your gold disappears.
Got it. So, so that is the thing about making charges with respect to gold. So then in your opinion, how should we look at buying gold jewelry? Right? Like if you had to buy gold jewelry and if you're also conscious about the value for money you're getting, how would you look at it? And also while you answer this, can you also explain about the different purity values of gold? I know there is 20 karat, 18 karat, 20, 22, 24.
Yeah.
Can you just explain all of these things for us?
Yeah. So 24 is 999 actually. So out of 1,000 grams of gold, 999 grams is gold and 1 gram is impurities because you can never perfectly refine gold.
Okay.
That's the best you can come. That's called 999. In India, we call it imported bars.
Imported bars.
Yeah. So in India, most of the manufacturing happens at 995.
Okay.
All our refiners manufacture at 995.
Oh, we can't even make 999
We can make, but it's not viable
in India.
because Indians don't pay for that.
Got it.
That's expensive. So whatever the price you're seeing, you can so some of the reference prices you want to see. Anybody who wants to buy jewelry, there is a website called ibjarates.com. IBJA, Indian Bullion and Jewelers Association, rates.com.
Okay.
Which only has rates. That's it. That doesn't have anything else. So it publishes rate two rates, AM and PM. So the morning one and the evening one. There are 2 times it is updated. Globally, gold physical price is updated twice. London AM and London PM. This is generally there twice.
Okay.
During the day, price is revised.
Okay.
Right? So there you can find 999, 995, 916, everything.
So 24 carat is
24 is 999 or 995 is also considered as 24 carat in India.
Okay.
So, right? And then it comes to 22 carat. So it's nothing but 100 into 22 divided by 24.
Okay.
Right? So it's you are converting the 24 into 22. That is called 916.
Okay.
So in 1,000 grams, 916 grams is gold.
And most jewelries, I'm assuming, are made in 22 carat?
22 carat, yes.
Because
it has to be made.
Because otherwise the jewelry won't hold.
Yeah.
If
It will
it's
break. It will be brittle.
It'll be brittle,
Yeah.
meaning it can break.
Yeah, it can break.
Okay. And then 18 carat.
Especially 18 carat is 750.
So that
75 grams is gold.
that also they will
75% gold.
that is also used for jewelry.
Yes, absolutely. Even you can use 40 grams, 40% also as jewelry. That
Okay.
doesn't matter.
Okay.
So if you typically and an 18 carat jewelry, your making charges also will be much lower because most of the times the making charges are a percentage value of the total ornament.
Okay. Okay.
Right? The cheaper the gold is, the percentage will come down. The value comes down.
Correct.
Right? So some jewelers don't prefer to give you 18 carat because they will say 18 carat is not available. Then you have to order for a manufacturing. Because you are now customizing that, then I'll charge you more. Generally, on the shelf it is available is 22.
Got it.
Right? So then you take the mass produced one. Right? So thing is, if you actually, for example, if you are buying jewelry for your mother or someone and you let them choose the jewelry and ask them to go home and you order it to 18 carat and take it, nobody will recognize. You just tell them it is 22 carat. Nobody will know.
Wait, I didn't understand. Can you explain this?
You have paid almost 20% lower.
Oh, wait. You are saying that
For a common eye, doesn't 18 carat, 22 carat, 24 carat, you can't distinguish anyway.
right.
If your purpose is only to wear it, why not wear a 18 carat jewelry? And globally, 18 carat jewelry is the standard. Only in India, we prefer 22 and 24 because we always used gold as a store of value. It is part of our savings. When Indian rural India didn't had access to banking systems, the only way a farmer will save and put his savings is into gold. So he wanted as much metal as possible to store as much value into the same piece. That became our cultural routine. Otherwise, for a wearing purpose, 18 carat is fine, absolutely.
Got it.
Yeah.
Got it. Interesting. So now let me ask you purely from an investment point of view, right? I'm not looking at it in terms of consumption.
Yeah.
I'm looking at it from a growth of my money.
Yeah.
Can you talk about the different options of investing in gold?
Mm-hmm.
You already talked about the physical options, which is the 24 carat, which can be either 995 or 999.
Yeah.
So in that, which one should I prefer? Because you're saying India has both.
Yeah.
Both are called 24 carat.
Yeah.
Which should I go for? The imported gold bar or should I settle for the 995?
995 is fine.
Okay.
So anyway, when you're buying, you're paying for 999 or 995. When you're selling also, you'll get for the 999 or 995. The
Got it.
price is absolutely different. Whatever you pay for, that's exactly will go when you're selling also.
So where can I buy this
You don't lose.
imported
can-
gold bar?
Most of the jewelers also will give, or bullion suppliers, or a lot of them are there.
So if I go to the jewelry shop today and I give,
You ask for a 1 kilo bar.
I'll pay 1 crore 20 lakhs, they'll give me one bar.
Yeah.
It's as easy as that.
Yes.
Cash.
Absolutely. Cash means
Give
nobody
wire
will
transfer.
take cash, of course, because there is a mandatory rule.
Right.
You can go up to only 50,000 today. Actually, it was 2 lakh rupees.
Now only 50,000 rupees cash is accepted.
Yes.
Okay. So I thought a lot of people still buy with cash gold bars. How are they doing it?
Not really, because of the GST and all, the input credit and all. So most of the jewelers now came into the formal economy. right? Earlier, this industry was had a very bad reputation of hoarding cash.
Yeah.
This was mainly used as a laundering industry.
Correct.
But after the GST and input credit, the manufacturer, all the jewelry bars which are imported into India, from there it is tracked. The bank sells them and all those things. But when the import duty was so higher at 15%, taxes were there.
Yeah.
It becomes a very remunerative to smuggle gold into
Correct.
India because there is a 15% arbitrage.
That used to happen?
It used to happen. Of
From
course
where
it
does
used
it
to
get?
happen.
Where was it getting smuggled?
Everywhere, in the sense Sri Lanka to Thailand to everywhere, and also there's a
Interesting.
lot of illegal gold which enters India through sea route everywhere, right? So that becomes an unaccounted gold, which there was an assumption that we consume around 600 to 800 tons of gold every year, right? So this unaccounted could be around 200 tons in those days.
Okay.
So government has completely killed that market by reducing the tax, because now the
Incentive
there
is
no arbitrage.
Yeah.
Incentive is not there.
Earlier it was 15% arbitrage.
It's too much. Yeah.
Now it has come down to 4%.
2%, 3%, and the cost of doing all these activities, of course, there is a cost of doing even smuggling, right?
Correct.
So that's not worth doing it.
Got it. So essentially, what you're saying is that if I want to buy gold, I can do a bank transfer to a jeweler,
Yeah.
and I can buy the gold bars.
Yeah. So you can buy from 1 kilo to 100 gram to 1 gram, 10 grams, 8 grams.
So this is
to
physical.
even a milligram also you can buy.
So this is physical
Yeah.
gold. Now, in this, there is GST also, right?
There is GST.
How much percent is the GST?
3%.
3%.
Yeah.
So then that is still a cost which I have to bear. So
Yes.
if I have to buy 10 lakhs worth of gold,
Yes.
30,000 is going to the government.
Absolutely.
So that still is a cost
Still
at the
loss.
time of purchase.
Still
It's a loss.
Yes.
So what is the next best thing about this?
Then you go for ETF,
Gold ETF.
gold ETFs.
So what is that? Can you explain to the audience?
So ETF is nothing but an AMC, the asset management company, launches a fund or a kind of a mutual fund, right? They procure gold for every unit you purchase and keep it in a safe vault. And every unit, for example, today, a milligram is a unit, actually not even a gram. So a milligram is roughly around 120 rupees today, 120, 121 rupees, something like that.
That is the
So
NAV
that's
of
the
this.
unit, one unit they issue.
Okay.
Right. So the number of units you hold, that number of amount of gold will be there in their vault. Right. The vault is generally hoarded by some third party agency. Right. So the security agency will be holding the vault, and there will be a custodian who will be looking at whether the actual gold is there or something like that. So the entire ecosystem is controlled by SEBI. It's regulated and it is approved. There are regular audits. So there is absolutely, you can be sure that there is gold available. So, but you are holding a piece of paper saying that you have this much gold.
Correct.
Right. And the GST is paid by the fund at the time of purchase. If tomorrow, if the fund has to liquidate his gold, they will recover the GST also. You will not have any loss of GST.
How they will recover?
Because
it?
they have an input credit. They bought, and when they sell, they also recover that. No?
So the fund
Because
gets that input credit.
Fund gets input.
Individuals don't get input.
Individual, because you are not GST registered individual.
Correct.
Right?
No, but if I'm
And
a
it's not-
proprietorship, then I can.
No, if you are buying gold for the business purpose, then you'll get. For the consumption purpose, you'll not get input credit, no?
Interesting.
Because it's a trade credit.
So if I invest through a ETF
Yeah.
or even a mutual fund,
Yeah.
same category, right?
Yeah, same category.
So if I invest through a mutual fund gold or a ETF gold, then that GST component is not there for me.
Yeah,
Because the fund
approximate
is,
cost of doing that will be around 25-30 bips, because the fund manager also, fund charges will be there, right? So
0.25%, 0.3%.
30-35 bips is generally most of the funds charge, but they built into the price.
Got it.
Yeah.
Can you name a few funds? What do you think we should
Yeah,
invest in?
Nippon has one of the oldest ETF. It's called Gold Bees.
Okay.
So most of the other AMCs, ICICI has, HDFC has,
Okay.
SBI also has. A lot of funds have gold ETF.
So I can invest in any of them.
Any of them.
I should just choose the one which has the lowest expense ratio.
Lowest expense ratio and more liquidity on the market.
How do I
Gold
understand
Bees,
that?
the more the instrument is traded, because it is traded on the secondary market also.
So I need to look at the volume.
On the exchange. So Gold Bees is generally has bigger volume. ICICI Prudential also has a good gold fund. And there are a lot of hybrid funds nowadays.
Okay.
Hybrid funds have equities also and commodities also as a component. That's been a flavor of the market for the last 2 years.
Got it.
So some of like ICICI has a large hybrid fund portfolio. Tata Capital has some of these. Everybody is now launching hybrid funds. So they will be having somewhere around 75% equity, 20% or 10% debt, and 15% commodities. Kind of thing. So then that will actually give you best of both the worlds.
Right. And also I think the taxation is...
That's anyway at the fund level.
Right. No, I think it is still taxed as an equity fund because it is more than 75% equity.
Yeah, it's a mutual fund.
Right. And then you get the 1.25 lakh exemption also when you sell it.
Absolutely.
So all of that benefits you get. Interesting. Yeah. And is there anything better than this?
So the newest format of doing it is digital gold. Nowadays, digital gold has picked up. So everywhere you can buy it, right from Google Pay to Phone Pay to all the apps, most of the apps.
But it still has that 3% GST, right?
Yes.
So it is
exactly like buying a coin, but on an app.
But would you prefer that if it's 3% GST both? And then there is a spread also when you sell it.
Instead of buying a coin, I would prefer that. If you are going to hold a coin rather than holding a coin, because when you buy a coin, so you pay slight bit of making charges also of the coin. Every coin has a making charges.
Okay.
Right? And also you have to keep it in a bank locker or maybe in your house locker and all those things. And when you're going to sell it back, again, you have to carry it to a jewelry store and sell it back. Right? And there also some of the jewelers will accept at the market level and some of the people will accept it. There will be a bid and ask. The sell and buy level of gold price, each jeweler will display. There will be around 100-200 rupees difference in that also. So that also will be So as far as digital gold is concerned, because you're not handling logistics, right? You just hold it in a wallet. And when you're selling it back, again, nothing is moving. So your cost of selling it back is much lower.
Correct.
So 3% is impacting you. If you are a business of trading in gold or something like that, or part of your business, then you'll get an input credit. But even in digital gold, that's a different issue.
Got it.
But the logistics part is much easier. At the end, if you want a physical delivery, most of these apps actually send you
physical
coin to your home, but of course at an extra cost of the courier charges, etc. That will.
And finally, what about sovereign gold bonds, which was really popular in the last few years?
Yeah.
But the RBI has now discontinued sovereign gold bonds.
Yes.
So can you explain what happened? And is there still a way to buy sovereign gold bonds?
No, I think in a secondary market you can still buy.
Right.
Some of the bonds are still listed.
Right.
Because they are only stopped the issuance of new bonds. The current bonds are still there and premature close is not happening. So there are bonds available. That was one of the best way to hold.
That was
the best way.
Because RBI was giving an additional 2.5% interest on top of the value of gold increase and zero tax if you hold for 5 years.
Yes. So unfortunately, I think there was no backup of gold in that bond. So probably what happened is that typically they just borrowed money from the people, and there was no gold holding it back.
RBI was not backing it up with gold.
There was no backing up of gold, and they did not anticipate the gold will rise so much, and etc. etc. And so they were typically short on gold.
So they can't continue that.
I think it was a major flaw which they realized much later.
Interesting. So we've spoken so much about all these commodities, gold and silver, but the world of commodities is much bigger than that, right? Everybody just knows about gold and silver. Can you name a few commodities apart from gold and silver which are still good investment options?
Yeah. So gold and silver are the most popular ones.
Yeah.
Biggest one is always crude.
Crude oil.
Crude oil is the biggest one. Because crude oil is used every day in, day out by every person across the world.
So you can buy that also?
You can buy that also. You can buy, hold, you can trade, everything.
Okay.
Right? Of course, the physical delivery is not possible in crude because you and me are not allowed to hold crude.
Yeah.
In this. But you can definitely trade in derivatives. You can buy as much crude as you want and all those things. That's the most popular and the largest commodity traded across the world.
Is crude oil?
Is crude oil.
Okay.
Right? And then some of the industrial commodities like aluminum, copper, zinc, nickel, even the agricultural commodities like sugar, wheat, soybeans.
So you can do trading with all of these things,
chana,
right?
Everything you can
trade.
Chickpeas
and chana also you can do trading?
Yeah, you can trade.
Wow.
Right? So some of these things gets delisted time to time, because when the government feels that they are uncomfortable with the prices, some of these agricultural commodities of late have been delisted from the market. But again, it's a matter of time they will come back. But around 70-75 commodities are approved to trade in India.
Interesting. And one of my friend was recently saying that he's investing in lithium because of the requirements in batteries.
Yeah.
So do you think it's a good idea to invest in lithium because the world is moving towards electrification, electric batteries, electric vehicles?
Yes. See, EV story is going to be that now have established. It's going to be staying that. This is not but there's a lot of this thing that this is a transitioning technology. So EV is not going to be, it's like a CD and a DVD. Right? They ruled for a bit of window, and then suddenly the pen drives came and everything got wiped off.
Right.
So I think EV is a transitioning technology. The hydrogen is going to be more established technology. That's going to be the future of automobile.
Wait. What you're saying is that EV is just going to be for a temporary period?
Few years.
Eventually it will be hydrogen cars.
Eventually that hydrogen is the bigger game.
Nobody talks about this. You're saying
if you talk to the industry, they'll be talking about it.
So you're saying right now we're in ICE.
Yeah.
ICE is moving to EV.
Yeah.
And then EV will go to hydrogen.
Yeah.
But nobody's manufacturing these hydrogen cars.
Because still it has to be commercially viable. Hydrogen manufacturing has to be green hydrogen. We need to have, still we have to burn coal to produce hydrogen. There's no point of producing hydrogen if you're burning coal or natural gas or crude oil, fossil fuels.
But that will probably take decades, no then?
It will take at least a decade for commercially viable. There is a lot of investments going into CBG, compressed biogas.
Compressed biogas, okay.
Yeah. So the entire, how you produce energy, how you use it is, see, there are two aspects of this. One is manufacturing or creating the energy. Second is use case scenarios. So the automobile is what? Using the energy. It could be in a EV format or electricity. How you produce electricity? Is it the dirty electricity you produce by burning coal? Then what is the point of having EV? You are anyway causing the fossil fuel and pollution anyway. But it's shifted to a factory rather than from my car. That's it.
Right.
You are not able to see, but you are cause of that.
Correct.
Right? So if you are producing electricity by nuclear fusion, it's more harmless and less polluting. That electricity is cheaper also.
Correct.
And that drives EV. That's a better way of doing it. But we don't have enough nuclear fusion, right? Like what Europe has. That's why Europe is converting into EV much faster than we are. Right? And hydrogen is something, again, because of the amount of time which is needed to charge your electric vehicle today. Hydrogen is just you fill up your water tank and then you go. Or fuel cell will be a much better option.
Right.
All those things. So, but commodities per se are part of all this game. Aluminum is going to be the lightweight for EVs. Copper is going to be, all the electrical components needs copper, electrical wiring, etc. It uses much more copper than what a traditional ICE vehicle uses. And silver is used in battery technology. Nickel, so rather than lithium, nickel cadmium batteries are going to come up much faster. They are much more stable. So nickel is coming into batteries very fast. So most of these industrial metals are rare earth metals. There's a massive boom in that.
And this is mostly coming from China, right? These rare earth metals. That's
and China-controlled areas, let's say Mongolia.
Okay.
And some of these Central Asian countries also.
China got very lucky that all of these things are there in their regions.
I think that's where the power struggle started.
Right.
Both AI and renewables.
So how do you invest in these? Like, firstly, is it a good idea to invest in all of these metals?
Again, so when you are unsure that which technology is going to stabilize, it's better to spread, right? You buy one EV manufacturer like Tesla and something, or you buy some battery manufacturer like BYD, which has both the ends. It has automobiles as well as battery technology.
Right.
Or you can buy somebody who is actually producing lithium mines or something like that. Or you buy somebody who is into recycling. There are a lot of startups in India coming into battery recycling because there will be a massive market for these batteries who will be expiring. Most of the vehicles which we have bought in the last 2 years, in the next 6-7 years, the battery will expire.
Correct.
Somebody has to recycle this and recover the components. There's a lot of recycling industry which is coming up. So there are a lot of ecosystem will be developing.
So you're investing across the supply chain of the ecosystem.
Yes.
Every the end producer, which is Tesla,
Yes.
and the person who actually made the battery,
Yes.
you're investing
From the
across.
mines.
From the mines, you're investing across
Yeah.
to diversify your risk.
Yeah.
And a lot of these things are happening in China. But whenever I speak to some of my richer friends, they're saying that, investing in China is not a good idea because you never know what's going to happen with the government over there.
Yeah.
But what are your thoughts? Like, because most of this technology is being developed there. Like you said, BYD and all of that, right? Like, how do I invest in these companies if I'm not sure about the Chinese government?
See, China has two jurisdictions, let's say, right? China is the mainland China and Hong Kong. Hong Kong is a much more independent jurisdiction which you can trust. It runs dollar, and it's like Singapore.
Okay.
Right? It's more autonomous rather than independent. I will not say independent because now it's part of China. Right? It's more autonomous. The rules are like it's a special zone, like DIFC in Dubai and Singapore or Mauritius. These are all the special zones, like it's typical to our gift city. We're trying to establish gift city as a special zone.
Correct.
Where we'll have a different law and dollar as a currency. Right? So these are the zones which you can trust, and this thing. Most of the Chinese stocks are available in Hong Kong Stock Exchange. Right? Or the mutual funds in Hong Kong or ETFs in Hong Kong. So it's a better way to invest is to buy an ETF which has the battery technologies and all those things consolidated into one instrument, or a mutual fund which is focusing on renewables. So those are the easiest way. As an Indian investor, you can use your LRS route to remit money and buy any of these
on the Hong Kong exchange.
Hong Kong exchange or some of the Singapore mutual funds.
So do you do a little bit of this?
We do that, yeah.
You
do
that.
Facilitate that.
Got it. And lastly, another one of my friend, he gave me a tip. He's like, Sharan, just buy Palladium. Something's big's gonna happen. So is there something bad happening with Palladium?
Not really. Actually, Palladium has significantly underperformed.
Okay.
One of the biggest use of Palladium is into ICE vehicles.
Okay.
Into catalytic converters, where we reduce pollution in the silencer, where you actually capture a lot of carbon out of this smoke. As the ICE vehicle demand itself goes down and we come into the Euro 6 and Euro 7, the pollution, the amount of pollution which is created by an ICE vehicle is also been optimized to a certain engineering perspective. So the use of Palladium has gone down for that, platinum and Palladium both. So they are not performed for the last...
so now this is the reason, guys, why you should not follow your friend's tip whenever you get some game changer tip.
Yeah. So you should look at future technology rather than the past technology.
Right. Perfect. I think that's all the questions I had with respect to investing in gold, silver and commodities. I think this was a very, very knowledge-packed session. So many things that I learned, so many things I did not know. And I think after listening to you for so long, I'm now as a much more informed investor. Now I know that if I invest in gold, silver or any other commodities, I know exactly what are the risk I'm taking, what I can expect, and how much % of my portfolio should I actually put into these different commodities. So as a last statement, if I have 100 rupees, how much % of my 100 rupees should go into commodities, according to you?
Yeah. So I think, again, depending on your risk appetite, you're a younger one and you can take slightly more risk, you should be around 15-20%. And if you become, as you mature as an investor and you become older, so you should have gold anywhere between around 10-15%. But if you are younger, you can go into some of the commodities like silver, right, which will give you much more. So overall, the balanced portfolio globally, historically, we've been seen is anywhere between 15-20% is commodities or commodity related stocks also. If you're buying Hindalco or Hindustan Zinc, you're actually buying commodity.
Correct.
Sun Copper, you're buying a copper actually, right? But when you're buying Hindustan Copper or something like the commodity company, you're also buying their management, their processes.
Right.
They can screw up anytime, kind of thing, right?
Right.
Not only. So when you're buying copper, you're buying pure copper. You're nothing to do with the management.
Right.
Right. So 15-20% of commodity related stuff in your portfolio will balance it out.
Perfect. And the reason is to sort of balance the overall volatility of your portfolio.
Absolutely.
Basically bring down your risk adjusted returns.
Absolutely.
Perfect. Thank you so much, Kishore. I think I'm sorted. I'm sure everybody who's been watching this for so long is definitely going to have their mind blown with the kind of things that they've learned here today. Thank you so much for spending time with us.
It's a pleasure.
I hope to have you once again soon when something big happens again in the world of commodities.
Sure.
Thank you so much.
Thank you very much.
Thank you. Before you go, guys, if this episode gave you even one insight that made you think differently about money, don't just keep it to yourself. Share it with your friend or family member who could use it too. And if it sparked a new thought or even made you disagree with me, drop a comment below and tell me why. Your critique helps me make these conversations sharper and more useful for you. As long as you have me subscribed, I'll make sure that you walk away with at least one new thing every Wednesday.